Okay guys, welcome back. Starting out the week here. We're going to go through the stock charts, put a video out intraday, and lots can still happen, but the market is showing me a few things I want to point out as of right now. And ideally, I like to put the videos out while the market's open so that people have an opportunity to take advantage of it. It doesn't do much good if I point something out after it's happened, unless we're able to read something from that price action to anticipate maybe what happens here in the future. So I want to put this video out here to go through what I'm seeing today. Let's get into it. I want to point something out though. Someone left a comment saying that the market is not in a bear market rally, but more like a bull market or a bubble, essentially. And I want to kind of analyze that comment. Someone's saying that we're in a bubble, not a bear market rally, and they pointed to the NASDAQ and the triple Qs basically. And that's understandable when you look at that. But I want to point this out. Here is your bull market trend line right here on the weekly chart of the S&P 500. That's the stock market, 500 companies. That's a much better gauge of what the stock market actually is. And so here's your bull market trend line. We broke that trend back here in 2018. And this is basically when I created my channel, was back here. So, I've been, the life of the channel has been bearish because we broke the trend line about when I created the channel. And so, yes, very, very true that I have been net bearish on the general markets because we broke the bull market trend channel. And I'm just waiting for this to fail. And the Fed just keeps stepping in, fighting it, not letting it fail. So it takes time, it takes time to break down. But here's the point that I want to make. To say that we're in a bubble, let's say you shorted the S&P 500 when we broke trend, which was basically on the weekly chart back here, October of 2018, October 22nd of 2018. So you broke trend. The market is up as of today. The market's up about 14.5%. Now that's as of today, and that's over almost 2 years worth of time. So to say that we're in a bubble, the market's up 14.5% in a little under 2.5 years time. I think that's a little hard to say that we're in a bubble of appreciation bubble of prices moving higher in the stock market. Yes, 14.5% over 2 years or less than 2 years is not bad returns, but that's just going, as of today. I mean, if you marked it back to March, then you would have said that over, a little under 2 years time, we could have been down 17.5% or something like that. So the reality is that, to say that we're in a bubble looking at the S&P 500, it's just not really that accurate to say a 14% gain. Now the economics are, horrible. The economy is horrible. So, to say that, because we're still up here, doesn't make a whole lot of sense when you look at the fundamentals. But again, bear market rallies don't necessarily have to be fundamentals. They're short. It's short covering. A lot of people were short here, overly bearish. You get the rally, you suck in more bulls, shorts, run for cover, and that's what these bear market rallies are based off of. Is just people buying stock. It's momentum, right? People buy something because it's going higher, not based on anything else, but for the fact that it's going higher. And so people continue to chase momentum until it ends. And that's what bear market rallies are. It's just momentum chasing. So to say that we're in a bubble is hard to say. Now, yes, if you look at the Qs, the massive divergence basically on the Qs, you can see going back to October, September of 2018, Qs continues to make new highs, but the S&P 500 has not made new highs. Here's your all-time high right here. We have not made new highs, so we're still in a potential bear market rally. This big plunge here could have been the start of it. You get the kickback rally, and eventually this rally, if it starts to roll over, then everyone will start to say, oh, you were right, it was a bear market rally. But it doesn't do any good anyone any good after we get a big sell-off or a big move down and the masses realize that it's in a bear market. it doesn't do much good to be, anticipating that after the fact. So that's why I try to continue to keep the reality intact that this could easily be a bear market rally, so that you have the opportunity to maybe profit from the move that the rest of the masses and the rest of the market will come to realize. While you're profiting, everyone else is realizing what's going on. So that's just what we're looking at. Now, again, if that doesn't happen, then, obviously, if this is a bull market and continuing a bull market run, then obviously, any positions that you have against that consensus would lose money. So risk reward, that's the name of the game here. So let's narrow it down to the 1 hour chart here, show you guys what I'm looking at. All right, so here's your island cluster reversal that we've had intact. They're trying to negate it. You can see they're popping it today, trying to break this. That's what the bulls want to see. The bulls want to see this pattern erased, and that would be that would fake out the shorts, anybody that's been short, and that's what they want to see. They have not been successful at it, but they're making a run at it today. You can see today what they did is they gapped it higher, and then it's just been holding higher. It hasn't really been moving too much higher intra-market, but it has not been selling off too much either. So most of the move took place in the overnight futures market. We're seeing a lot of that where the market moves higher in the futures, and then when it opens, it either sells off or just goes sideways. And that looks like what we're getting today as well. However, if we close today back below this 315.68, it's right about here, then that's just another, failed attempt at closing the gap here. And, we have to just continue to watch that until they're able to fill the gap of this island reversal. This sell signal is still intact. So again, like I always said, when you have a very clear sell signal, they're oftentimes going to give you a shakeout move or a counter move that will shake people out. They do it all the time where you see something so obvious that if you take it, they're going to try to shake you off that trade prior to the market actually making the trade. So that will come in the form of counter trend moves or stop raids where they pop it up into this and run everyone's stop, and then the move happens. You see it all the time where you'll set a stop, they'll pop it right up into your stop level, and then it instantly reverses and sells off massively. So we have to continue to watch for that. But again, I suspect that this is going to fail. It's just a matter of when. Let's look at the Qs. So the Qs is really where all the strength is at in the market. That makes for a very weak market when you have just, the fangs basically are what are rallying for the most part. And it's not necessarily the rest of the market. So again, they're popping it up here, and we're just waiting for a sell-off. When the Qs sells off, the rest of the market's going to sell off. So again, you just have to continue to watch this. Let's look at XLV here. For anybody that's new on the Qs, I've got a couple trend lines out. This trend line here is on the weekly chart. So I'm watching this one. Here is your bull market resistance line. And again, I said it wasn't going to be that accurate because I marked it out on the weekly, but we've got a couple tags there, couple reactions right in here, reactions right in here. So I'm watching that. We're up above it right now. So if it fails, and again, this is the weekly chart. So you want to wait for a weekly close. We're above it as of right now, but if the week closes back below it, then that would still hold true and that would hold as resistance. Last week, we barely popped above it, but again, my line could be slightly off. This week, we're above it. Where's the week close? Does the week close, down, or do we close, moving higher? That will be a tell in terms of where the bigger picture, longer term trend is probably going to be in the Qs. I think Qs is probably going to sell off. That's my gut feeling, that we're going to get some sort of impulsive sell off in the Qs, but we have to wait till we see it. XLV, this thing just continues its sideways trading range. There's really nothing going on here. For me, it's a no touch. I'm not trading it right now. I'm just watching it, but it's just chopping up and down. I've got my trend line marked here, but it could be, now you could move it all the way up there because we hit that before. So maybe that's your trading range. Again, it just continues to kind of chop up and down within this trading range. So we have to just continue to watch this. XLF is interesting. Here's the support line that I have marked out on the hourly chart, going back to the March lows. Reaction, and then as you zoom in, you can see we're trading below support, so that's acting as resistance. On Thursday, they popped it up above the support, and it failed back down. They did it again today. It's just, we've seen this where they're gapping up and it's selling off, gapping up here today, selling off. Today we're back below resistance, so we'll just have to keep watching this. The futures, it's very interesting to see how they're gapping things higher in the futures, and then it's selling off during the regular market session. So I don't know exactly what that means. I mean, when I read that, I see market consensus being weak, at least in the financials. I see that they're selling financials when the big money is selling financials, but then they're moving it higher in the futures. So we'll just keep watching this, but right now below resistance. We'll see where the day closes. They might be able to recover it. Who knows? It's right there, so we just don't know. Walmart, again, continued relative weakness, down 0.5%, while the market and the SPY is up. The SPY is up, 1.5%, and Walmart is down, about 0.5%. So again, relative weakness. This is just when you see this thing day after day after day, you can put together the whole picture, and it tells you that, okay, Walmart's weak. I mean, there's no strength in Walmart. I'm not seeing any strength whatsoever. Walmart is weak. Walmart should continue to be weak. So what are we doing here? Well, we're just flagging out right now. This is just a bear flag. So you can say, here's your breakdown. You didn't break down that much, and now we're just kind of flagging out. So I expect we're going to break down again and continue to show weakness. And the weakness will come, on selling days in the market. Walmart will sell off probably more. And when up days are in the market, Walmart just can't really put anything together. It just continues to be weak. It's at support right here. This is basically support, 118.60. So a break in support should set this thing up for the next move down. Apple and Microsoft. The primary reason that the market is holding up is Apple and Microsoft. So here's your uptrend line in Apple. We just continue to work our way higher over time. So there's nothing bearish about Apple in the price action. We do have negative divergence, though, in the PPO and the RSI. So that is forward-looking indicators that tell us that a breakdown is coming. And it doesn't mean that it's happened yet, but it tells us that a big move to the downside is coming. And what we need to see is a break of this uptrend line here, this support line, in order to trigger or confirm that breakdown that's being forecasted here in the forward-looking indicators. So when you're looking for divergences like this, what you're looking for is what's going to happen next, or what potentially will happen next. And then you look for the trigger that says, okay, that thing that you thought was going to happen next is actually happening. And so that's why you look for the breakdown in trend lines for the next move. Microsoft's the same story. A much tighter uptrend line that looks like we've got going on right here. Microsoft's kind of gone parabolic, so this is the momentum that is taking place. I expect that this momentum oftentimes will end. You don't want to step in and get involved. I don't chase momentum, so if it's already happened, I let it run, and I look for the counter trend move, or the move that's going to happen when this momentum fades. Because momentum trading, you can ride the momentum, and a lot of guys on YouTube, they're all momentum traders, so they basically find momentum and jump on it, and that's fine for day trading especially. But for swing trading, oftentimes I look for the move that's going to happen after the momentum fades. So I kind of look for signs of momentum fading, and then I look for the break of that momentum. And then you can usually you can get equally strong momentum the other way. So that's kind of what we're looking for, because momentum, when it breaks, everybody runs and scrambles and tries to get out as fast as possible. And that's why, stocks that move up on momentum can move down faster and harder on the downside than they moved up, because there's no fundamentals necessarily. It's all momentum. And Microsoft's a great company, and Apple, great companies, but are they more profitable today than they were, a quarter ago or 2 quarters ago? Are they making more money today than they were? Well, we'll find out here real soon when earnings comes out. And I'm pretty sure they're going to say that they made less money. They might try to spin it as they made more money than what they expected, even though it was less money than last year or last quarter. And maybe that's a good thing, but ultimately less money is less money, and that does eventually have to get worked out in the price action. Draftkings, this is just a trade idea that I've been kind of watching. So we've been flagging out right here. I was bearish on this back when it broke the uptrend. So again, this is what I'm saying. Here's your uptrend, just a momentum trade based on the stay-at-home stuff. Everybody thought, okay, this is going to do well when they're stay-at-home. And obviously it had a huge move higher. From down here when the momentum started, it ran up about 290%. So huge move up. And then the momentum started to forecast that it was going to break. Here's your divergence right here. So you can see as price is running higher, the divergences are saying, okay, this momentum is running out and it will break. And then it did break the trend right here. Had a kickback rally right there. But anybody that took that kickback rally thinking that the momentum is gaining again probably didn't realize that we were trading below trend. And then we broke. And from the break, it actually fell 27%. And so the trade that, we caught, the first trade that we caught was basically from here all the way down to the bottom here of a 25% gain. And then I exited that. But now I notice it's flagging. It's just bear flagging right here. So if this is going to break, and it looks like it wants to, we might get another impulsive move down, possibly down to this $25 range, which is probably about another 25% down. Yeah, it is. So it looks like that's what it's potentially going to do. We just need to see, I need to see a little bit more follow through and some daily closes or something below this flag to start breaking down. But it does look good for a potential continuation move to the downside. So once this consolidation period ends, we'll see where the next move is going to be. Redfin here. Again, this is another momentum name, just like Draftkings. We broke momentum right here, and we do have negative divergence now. We've got it in both the PPO and the RSI, but the momentum carried through, and it's just been trading very programmatically, systematically on this secondary trend line. So what we're waiting for is a break of this trend line to trigger a sell signal, and then we'll let this thing roll over. So that's what it's telling me it's going to do here with the momentum fading right here. We just need to wait for the breakdown. So until we get that, there's really nothing to do. You just sit on your hands. Again, I don't chase momentum. It's already happened to the upside. So we just wait for the breakdown, and we grab that when the trend reverses. And these indicators tell me that will happen soon. All right, Tesla. Anytime anything goes parabolic, I always get interested, usually in fading it. But there's nothing to do in Tesla right now. I'm definitely not shorting this thing here. I'm waiting for some more clarity around the price. You can see that Tesla has just been gapping higher and moving just pretty much straight up. And it's now, it's basically a bubble. I mean, it's in bubble territory. I understand, great, cool cars. And, I get the whole argument around fundamentals that it's not a car company and it's autonomous driving company and all that. Okay, fine. Throw that out. Tesla today is not a larger company and should have a larger valuation than Toyota. And that's what they just passed Toyota in their valuation. So the stock is clearly in bubble territory. Toyota delivered 11 million vehicles last year, and Tesla delivered 300,000, I think. And that's in 2019. So 300,000 compared to 11 million, that's substantially larger deliveries. And, you know, if Tesla's an autonomous vehicle company, great, but they're not selling that as a, you know, autonomous drive. They're not selling that as a mass. That's not where they make their money. They make their money from selling cars. And so this thing has been detached from fundamentals. It is a bubble stock at this point. It is just parabolic, and we just wait for this thing to break. You know, I don't know when it's going to break, so there's no reason to, you know, just get short here. It's at all-time highs, and so we're just looking for signs. You know, maybe it's going to run all the way up here, you know, and continue to run higher. We've got this trendline resistance right here, so maybe that plays out. Again, there's nothing to do for me personally. I don't chase a parabolic move up, but you know, there's no reason to short it here either yet. So we'll just continue to wait for like some sort of a reversal candle or something, you know. Until then, we just are watching it. Zoom. This one looks like it just put in a reversal candle today. We need to wait for the daily close, but here's what I'm seeing in Zoom. We've got this bearish rising wedge that it's been making right here. Over the, you know, this is an hourly chart, so we've been making this for a little while. We have negative divergence in play on both RSI and PPO, so that's in play. That tells me we're going to get a trend reversal. And then we have this larger trend line down below. So we've run way up high, you know, way away from the larger support line down here. So I think at very minimum, we're going to get a retest of that trend line sometime soon. And that might be the trade right there, a break of this bearish rising wedge and a move down, you know, 24-25% gain to the downside. So what do we need to see? Well, a break of this support line right up here, depending on when we get the break, you know, 260, maybe something like that, a break there, maybe a 251 break, some sort of signal. You'll see it. You'll know when you see it. It'll be a nice break. It'll either come in the form of a gap down and a big sell-off. There will be a nice clean breakdown of this uptrend, and that will be your trigger. But if you look at the daily here, possible doji. We'll see how the day closes. But you can see we ran up and popped above this resistance right here and then reversed, and we're making this doji, falling star doji or shooting star doji. So a continuation. When you get the doji, the reversal candle, what you want to see is the next day, preferably the next day, a nice big red down day. That is confirmation that this was a reversal. You want to look for that confirmation. That's what we're looking for now. If we get it, that should set us up for a nice big sell-off. So I'm watching for that. We haven't broke the support line right here, but we might. It might come soon. It might come in the form of a gap down. We just have to wait and see. Okay, guys, that's all I got. Try to keep it under 30 minutes, just covering these stocks, a couple of trade ideas, and hopefully I'm able to give you the general market read. So leave me a thumbs up. I do appreciate that. Catch you guys on the next video.